Hey, what's going on, everyone? I want to give you guys a day two recap on the newly funded account with Topstep, the express funded account. Now, we took some very, very simple and easy trades that I like to look for each and every single day. Now, I came in today with the intentions of sitting out for the first 30 minutes of the market. But when you see setups, right, and I'm human, I'm not perfect. When you see setups that align with your model and it aligns with your strategy and it aligns with the way that you think and how you like to trade, I couldn't resist taking a trade. The first trade setup was right off the bell. I ignored that. That's a 20 SMA play. I ignored that. We put in this a little bit of a high. We got rejected at the 50 SMA and EMA, and we pulled all the way back down. Now, when we pulled all the way back down, and let me zoom this in a little bit. When we pulled all the way back down, I noticed that we held the 5 and 10-day moving average with no follow through. Now, once we reclaimed the 20 and 50-day moving average again, now the light bulb is starting to go on. Now I'm starting to get excited. And as much as I did not want to trade the first 30 minutes a day, I'm looking at this trade that if it confirms, right? And let me kind of scroll here because I want to show you guys some pre-market data, that if it confirms, we did have a little bit of space to run into supply here as well as here, okay? Now, this was going to be the 100 simple and 100 EMA. And the next supply zone was going to be the 150 simple. So with that being said, I was also looking to challenge this prior swing high from the pre-market. So as soon as this confirmed, I jumped into the 20 SMA play. The momentum was strong. I like when you get into plays and it starts to go. You start to see the P&L speed up and it gives you an opportunity to get in and get out, right? Get in, get green, and get out. You guys in Evolution Traders know what I'm talking about. So with that being said, I jump in with one mini contract. Now, again, I'm trying to play this very, very small. I could easily play micros to start the day, but when you get such violence and such quick momentum moves like this, and it's coming off of the back of a nice pop, a pullback, a hold, and then a fresh setup, always gives me momentum to want to take that quick trade and that quick money. Now, as the day goes on here, what I was looking to see have happen here was the first hour highs get taken out, okay? So we put in this initial high off the open. That first 30 minutes is going to complete the first hour candle. All I'm looking for here is a confirmation of the first hour highs. And you can see here at this point in time, we kind of flagged, we pulled all the way back, and yet again held this 50 EMA. And as soon as we exploded through the first hour highs on this candlestick, once more, one more mini contract, get in, get green, get out. Very simple. I'm not looking for a lot of points, especially when I'm trading minis, especially on a new infant, baby, toddler funded account. I'm looking for 4, 5, 6 points. Very, very quickly. I'm looking for that $80 trade, that $100 trade, that $120 trade. If I can get those trades, I tend to cut them. Now, could they run all day and I give up hundreds of dollars, sure. Not my trade, someone else's trade. I'll leave that money for someone else. What I'm focused on is what I'm focused on. Now, when we started to hit this 200 SMA, I know a lot of traders got trapped here because you're trying to take this breakout through this high of day, and then it chops around, and then it confirms, and then it pulls back. The original move started here, guys. The original move started off the open. It gave you a second opportunity to get in here. It gave you a third opportunity to get into the first hour highs to ride this wave. But now we're jumping off the 10th story, right? Why not get in here? Why not get in here? Why not get in here? 3 opportunities: pop, pullback, break. Pop, pullback, break. Right? So this is classic. It's a, it's a classic pattern that a lot of scalpers look for. 1, 2, 3 pops, and then pull back, and then take out the trend line. 1, 2, 3 pops, pull back, 1, 2, 3, and then break. Right? So again, this is like old school way of trading. And again, you can see it aligns with my moving averages, so forth and so forth. But once I seen this start to pull back, right? I seen this start to pull back. We got an aggressive red candle here. I should have started to think to myself, maybe, look for that rejection spot up here at this linear regression. But again, I was confident with the gains. I was not stressed at all. I let this one go. Okay. So I let this short play go, right? Catching this top here. And I let it see if we were going to come back into this 50. And what did we do here at this 50 EMA and 50 SMA? Okay, now I'm looking at, we stood once, we stood twice, we stood 3 times. If we don't break the high of day and this loses or gives me another setup, and I was actually on stream when it happened, but I took one more trade before the losing trade. So the winning trade was here. When I seen it hold once, twice, 3 times, I told myself this: if we break this candle, now this is an indecision candle, right? This indecision doji, half looking hammer candle here. If we break those lows, I want no part of the long trade. So I got in here, I traded 2 micros. I set an 8-point take profit. It's only $35. I got in, got out. But again, I'm already up on the day. So I was kind of explaining to people in the live, and I was kind of explaining to people in Evolution Discord, that I don't care if we're making $10 or we're making $20 or we're making 200 or we're making 2,000. Guys, winning is winning. We need to stack good days. We need to stack good trades based on, what we're doing. I can sit here and take 4 or 5 trades at $30 here, $40 there, $50 here, and it's still going to add up to a $200-300 day, which is completely fine. You can make really, really good money trading micros. So I went ahead and I took that position. Okay, I took that position and got a very, very quick 8 points for $35. Great. Now the next trade that I was kind of looking for was going to be, if we did not put in this new high, okay, I was going to look for the short position. Now, I should have stuck to what was working all day and really allowed the 50 SMA to be broken, which it got broken later on in the day, but I wasn't trading later on in the day, so it's completely irrelevant to me. But if you notice, all my trades were long. The day's trend is up. We still have not broken through and closed below a previous swing low. We didn't get, back below this pre-market resistance that was now acting as support. You can see, look at the swing high from the pre-market over here, guys. You see that where I'm highlighting? Look at that previous swing high. Look at where we pulled back to and we're bouncing. Previous resistance is acting as new support. So I was looking for the short position on this 20 SMA here. Now it closed below the 20 SMA. It kind of bounced. It trickled down. I took the short position, and then it ended up popping. And when it popped up back here over the short-term moving averages, I went ahead and I got out. And it was a wrong decision. What I could have done here, and truthfully in this scenario, and I'm looking back at it now, on this short position that I got into, thinking that it was going to break down because we closed back below the 20 SMA. Again, thinking is never a good idea, and that's a stupid word for me to use. When I got my setup based on my strategy, and I noticed that multiple touch points, 3 times, almost 4 times was holding, and now we're testing yet again. The longer price action tests a specific level and it does not go through, and it holds and it holds and it holds, eventually when it breaks and it goes really, really quickly. So I felt like I gave it enough opportunity to bounce. I took part in these bounce plays, and I set up another short position for an 8-point take profit. Once it confirmed, it immediately just started going in drawdown. And what I should have done was give it the 200, right? So allowed myself a little bit more risk. It was only 2 micro contracts. I think the most I would have been down was maybe 80 or 90 bucks, right? And I was up already on the day 300, 320 or something like that. So it wasn't going to be that big of a deal. If I did take $100 loss on this particular trade, or an $80 loss on this particular trade, just to see it play out. And that's a point I want to make. The point I want to make with this whole rant here is sometimes you need to size small and allow the trade to work out. Because in this particular situation, we did bounce, and right where I got out on this candle here, was a good decision at the time, because the next candle looks like it's ready to go. It's ready to go higher. And it gets rejected, and it ends up falling all the way down through my entry into that 50 SMA where I would have made my take profit. So it is what it is. The next trade that sets up here goes a little long, and it is what it is. You could have made some money there. I'm not going to cover the rest of the price action because I wasn't involved in the rest of the price action. But the moral of the story is disregard trying to make X amount of dollars. There's so many people that are trying to figure out how many days do I need to make 200 with Topstep before I progress a payout. Forget that. It's irrelevant. How about you just trade for 2, 3, 4 weeks at a time and then analyze your data and see where you're at. With Apex, I got to wait 10 days until I can make a payout, and I got to make X amount of dollars again. Don't worry about it. If you just let the days pass and you take your good trades, and the main thing is to manage your money. So when you go up $100, $200, $300, $400, you have to manage each future trade against that P&L. So for example, if I started off the day trading mini contracts, well, why would I run the risk of continuing to trade mini contracts and potentially giving away everything I did early in the day? No, I'm going to cut that all the way down. I'm going to trade micros. Even if I'm right on the trade, sure, it's just a little bit of cash, but guess what? It's making my already green day grow bigger and grow bigger and grow bigger, versus taking the trade with the same amount of size and then wiping everything out and now losing my mind, going on tilt, revenge trading, trying to get everything back. Always, when you go green, start managing your contract size against your running P&L. The same thing as if you're red. If you're red $500 on a day, the last thing you want to do is go double your size to try to make it all back in one trade. It's not the smart way to trade. Again, I know we're human, we're stupid, we're not the smartest people out there. I'm one of them. I'm not smart at all. But I'm trying to do my best to manage my money accordingly, because I know the power of 20. If I'm not going to make $300 every day. There's no shot in hell that I'm going to. I might make more. I might make a lot less. I might have a huge losing day. And then there's no way that I'm going to have every day for 30 days a winner. But if there's 20 some odd trading days in the month, let's call it 20 trading days in the month. The power of 20 means that if I could average $300, what I took home today, that's a $5,000 a month on one account, guys, on just one. Imagine if you had 10 accounts. Imagine if you had 5 accounts. Now, again, you're not going to make that every single day, but it helps me cut the plug because of the fact that if I do that power of 20 rule when I'm up $300, it's easier to just turn it off and stop trading on the day. Okay, so when I do that, it allows me to feel okay about myself. Now, what happens tomorrow happens tomorrow. I hope you guys enjoyed the video. Make sure to like, comment, and subscribe, and I'll see all of you guys on the next one.